Welcome traders. Today we are discussing the frequency matrix and how to trade this matrix as a trader. The tool we have is level 4 auto frequencies. On this day we are expecting the frequencies of 2, 5 and 8 to take place because of the date being 2. We see once these are printed, we have 5 here, 5 here, 8 here. We have also in the bottom. When the market is opening here, we don't know which side they will extend because we're not using any oscillations. We're just looking at pure frequencies. So let it hit 2, 5 and 8 and we have to make a decision. Now if I put an oscillator, it will be clear that we will trade here or not. So for that reason we will add a prophetic oscillator. We can also use a level 1 balance imbalance oscillator. We have added balance imbalance oscillator. This is 10-minute chart of ES. Now I'm looking at how the market is reacting to these frequencies during the trading hour. Alright, and let it extend. We don't have a context from the previous scenarios. Who is in control? Who is gonna be retested? Buyers or sellers? Just keep it simple. Just keeping a focus on the frequencies. So right now we're looking at the frequency of, as I said, purely 2, 5 and 8. And market, I don't see any 2s here. I see doubling of that is here, 4. So I'm more interested in this 5 because I have confluence of 2 frequencies coming together, even though there was a 5 here as well. Alright, so when the market gets there to that frequency, we look at the oscillations, then we wait for the close. We wait for the close. So this market we have this bar right here, right? It is stopping at this frequency at 4. It touched the frequency, almost missed by a few ticks. But look at the bar. This was a bullish bar. This bar closed below the close of this bar. This is actually a reversal bar and it's an engulfing reversal bar. So I think this reversal is in play, and this is happening at 2 and 4, which is, sorry, 2 and 5 and 2 and 4, same thing, doubling frequencies. I'll take a shot and go for a scalp. Alright, next thing is same things happening at 5. Now this is purely 2, 5, 8 because we understand these are the bounding frequencies. 2, 5, 8, 1, 4, 7, 3, 6, 9, went to 5. Went there, we saw a rejection of the bar. Now this is a very extensive, big, huge bar, right? Alright. Well, look at the oscillators telling us we look to go short. If you want to bounce on it, you have to hide somewhere here. Now remember, 2, 5, 8. 5 is here, 8 is here. So it could have gone here or here. If you're going to take, because of the oscillation, we want to take a short try. Stop loss is going to be just right here, right? It's a 5-point loss. But we are going 1 to 3, 1 to 5. We're not looking at a tick level accuracy. It's not possible through bars. You have to look inside the bar. So this is how this day was perfectly traded. Came back up again here at frequency of 4. Came back down, let it retrace some ATR boundaries and come up at 4. Alright, right there. So this is one of the reasons, if you see, now this is the same pattern, right? Close of the prior bar was here, close of this bar is here, the lower low close, and it's reflecting from what we're expecting. This is where you can take a short again. Alright, so this is how you can possibly trade. There are a million ways to trade, but you need to have a location, right, to where you want to trade. This day we're looking at 369, went directly to 6. Alright, came back down. Now it is coming down on 3. It's not even a single huge bar. Some news came, right, obviously. And look at these two frequencies on the oscillation. They went way below the blue line, the way we like it. 2 of them, actually 3 of them, which is very hard to see. You'll only get 2. This is amazing trade to go long. We love those crashes. All right, and this was happening at frequency of 3. All right, so 369. Now 3 is here. It stopped at 1. If you do a subtraction of 3 on the left side, 12 is 3. This is 3. 3 minus 3 is 0. 1 is 0. As we know, start from 1. There's no 0. It stopped at 1. Excuse me. And here we are. The market let it pull up, came back to 3 to the tick a couple of times. But right now we need to have 2 oscillations here. But this was the best trade for this, and this was the best trade on the top. Right? They're coming. 3 is coming. You just take a shot at 3, hide behind here. Alright, this is how we are trading the frequencies on 10-minute chart. You look at the bar, look at the closes, how they're interacting with each other. This day is 147. So I'm looking at 147. Market came down here. This is 7 sitting here. Went from 7, went to 7. Take a shot. Now look at, remember this. This huge exhaustion bar closes on the top. This bar closes on the below this. Same button. Reversal has to happen somewhere. We are looking at our oscillations, 2 of them on the top. If you want to jump the gun without this pattern, you can just stop somewhere here. There it is. All right, cool. And then we're looking at 4, doubling frequency is 8, sitting here. It went down to 8 and it took off. And then luckily our oscillator, 2 of them were helping us, right? So keep an eye on. This is the way it works. If you want to do something with predictive analytics, this is how it goes. Again, 5 wins 10. Okay, 2, 5, 8. Same thing is happening here. So this is subtraction also. 3 and 5 is 2, 2, 5, 8, right? Okay, so we're getting some ideas where we will trade up front. We will not trade anywhere we want. We want to be in one of those frequencies. We teach you all the frequencies. There are huge list of frequencies we deal with, but this is simplistic. All right, just place the tool. It is just plotting it for you automatically. All right, here 5. So where is 5 here? Well, I see a 5 here. This is one of the example. Same thing, right? You are sitting here. If you just jump it, it's a problem. It could work, could not work. Oscillation was there as well. It's telling you this turn is coming. The official turn happened when this close reversed. Close was here, higher high close, reversed. There we go. Now you can trade future options and perfectly works out nicely. Okay, next thing is 258, right? So this is 258 sequence. So 2 is there, 5 is there. Okay, 5 was here, 258 is here, right? It went up and went up and went up. All right, so now where is the 8? This is the bar which proved it, right? Open is here, close is here. All right, so you can have 2 charts, multi-time frame. This is 10-minute. You can also have 2-minute chart. But you let the frequencies run on these. Look at this. We're already expecting a short coming, but remember, this is what it is. Oscillations moved up very fast with this big bar, stretched it out, but there's no frequencies to trade. So the market went up even higher. Now this value is dropping off. The divergence is coming. It's happening on 258. So we know this is going to be reversal. 5 double is 10 is 1. So 1 and 8 is our area already plotted for us. Alright, let's keep going. So I hope this helps how you trade this frequencies, auto frequencies. Let's do a few more days and it should be good to go. This is a day which is going to be 8, 2 and 4 and 8. You can see that very clearly. Alright, we'll see what happens. I'm looking at the frequencies are gonna hit somewhere. 8. Is there any 8 here? I don't see any 8. Alright, if I don't see any 8, which, let me see this. Yeah, this is 9, this is 9. Okay, there's no 8 on this day, so we have 4, or we have 16, which is 7. We also understand from our understanding that, hey, there's no direct print of frequency of 8. We could also look at 9, because 8 is hidden 9. Alright, so, and half of that is 4, half of that is 2. So what is happening? Market is coming down, looking at some oscillation. It's like a market is in balance, up and down, rotating. Market then takes off aggressively from hidden 9 here, 9 here, 9 and 9 took off. Where it went? 2 and 4 clustered, half and half, right? 2 and 4 clusters. Clusters is the key, and there it is. Oscillation was there. It was saying 2 of them are above the blue. Perfect trade, right? Boom, hide behind here. All right. Next day, 9. 9 is 369. 3 is here. 9 is here and 8. Same thing, and we got the trades. Look at the oscillations. Right here, boom, below blue, 2 of them. This was not really that. It was not really 2 of them. It was just like this was the early trade. If we had to retest it, we can use some other oscillators. We have to. And then next one is hidden 9. Is there 8 on the top or 9 on the top? I don't see any 9s, right? So looking for 9. The same thing happened here. I don't see any 8s. I will use 9. I don't see 9s. I use 8 along with the oscillations. All right, last one. On 12:10, well, we almost done. We'll just finish it off. All right, 12:10. 10 is 1. 1 is 5. Okay, 157. Sorry, 147. So what I'm looking for is 147. Okay, so this is a little bit complicated pattern, but if you see here what's happening, remember at the oscillation you have to ask the question, say, what is it, shall I go long here or shall I go not go long here, right? So it stopped at 3. I'm looking for 10, which or half of that is 5. So 5 is here. Okay, 5 is here. Oscillations, 2 of them are already here, right? Selling at 8. So I'm looking at taking this 5. Boom. How about this 5? Market came down. Well, this guy was ready on this 5. You may have taken some stop loss or heat. Got something out of here. Alright, on the top is 5 sitting right here. Went up to the 5 with the oscillations. Now we have so many other ways to really see where it will really go, right? This qualification, you have to watch all those level 1, 2 and 3, and you have to use some beams, you have to use different things to really pinpoint, and it's process of elimination, right? This is oscillator in the bottom is one of the ways to do the filtration process. That's all there is, filtration, right? All right, at this point, oscillator was supposed to be on the blue, it's not, but there's a divergence, very clear divergence between here and here. And there's also one more interesting thing happening, which is, remember, 1, 4 and 7. So this double 8. 8 plus 8 is 16 is 7. So this is a hidden 7 sitting right here. Why? Not directly, but through frequency of 147. It's sitting with the 5. This is where it went to. Market just attracts to these frequencies. What can I say? Well, you can use some future options, ES future options, right? If you want to trade at the right levels, there's some complex hedgings also we can do, or you can just have to deal with the stop losses. And yeah, that's it. 11 is 2. We're looking at 2. 2 is 2, 5 and 8. 2 is here. Where else is the 2 in the bottom? Market came down here, 2, 5, went to the 2, went to the 5. Let's see where it happened. Market opened, boom, 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 went to 5. Look at the oscillators, 2 of them telling you it could take 5. It's coming. Went to 5 to the tick, boom. All right, then when it went upstairs to these frequencies, we are looking at this guy. Okay, is it going to be a short? Well, let's do the other bar. Red colors, what you like, right? Same thing. Look at the close to close. This is a bearish engulfing pattern right there at our frequencies 2, 5, 8. Look at this cluster 5 and 8. 2 is not there, but 5 and 8 is there. Cluster, boom, cluster right there. Bearish engulfing went down. 2 of these are above the blue. Stop loss will initially be here. Take it off. Right now, the problem will be if you are using some bigger contracts, 10, 20 lots, there will be a problem. Because especially if you're using other people's money, right? So you can start with micros as you build your accounts, and you can take this effectively. Slowly grow the account. Here is again we're looking at 2. This is a 2 and 4 cluster together. 2, 5, 8, 8. Now this is again, think about it. 2, 5, 8. Okay. 2 is there, doubling of 2 is there, 8 is not there, 8 is hidden 9. See this? How things are just hidden in nature. But it is 2 is there, 9 is there, right? 9 is there. If you want to just be a scalper. Well, anyway. Alright, last day, 12, 12. Well, it's 3. So where is 3? You have to look at 3. Market open here. We're looking at 3, 6, and 9. Look at the along with the oscillations. 9 is here, 9 is here. And I think that it took off extremely aggressively. Okay, so 3, 6, 9. 6 is here, 6 is here, 6 is here, 9 is here. So double click. So this is 3, 3, 6, 9, right? They connected right there. 3, 6, 9. Oscillator came. Now this is 10-minute bar. It's not a tick scenarios, right? We look inside the bar on a very fast tick level charts and see if the buyers and sellers have showed up or not. WAVE59 do also offer that. You have to check the videos how you can enable and cache the data and tick level data. And that's it. I think we did it. Wow, next. So that is the thing, right? This is all again, I'm running on 10-minute chart. It seems to be very effective with dealing with frequencies. If you try to play with 5-minute or other minutes, statistically, we have to go back and check, right? 50, 60,000 samples. This is how we come with this ideas. Once we have a mathematical model, we have to prove it by statistical evidence, which should be around 70-80% accuracy, right? And should have a very high alpha, and then it should have very high profit ratios, right? Lose 1 to make 4, lose 1 to make 3, lose 1 to make 8. So that means you have to hold longer through the pain as well, right? So this is how big companies trade. If you're scalping, again, you have scalping opportunities as well, but you have to add inside the bar some low level other information. You have to get into a little bit low level the beams coming up, planetary beams coming up. You have to do some little bit extra effort. All right, there we go. Thank you so much.